Welcome back. In today's episode, we are diving deep into the markets section of the Binance Futures trading interface. Specifically, we will explore the different order types available and how to use them effectively. Stick around because we will also touch on two critical concepts: last price and mark price, probably in the next video, which can make or break your trading strategy. So these are the types. You can see the limit, post only, market, stop limit, stop market, conditional, trailing stop, and then TWAP, or better still TWAP, and then we have the scaled order. Let's tackle them in this order and this sense. So the first one is limit order. Now, a limit order is an order to buy or sell at a specific price or better. It gives you control over the price at which your order is executed. For example, if Bitcoin is trading at 30,000 but you want to buy at 29,500, you set a limit order. Your order will only execute when the price reaches 29,500 or lower. So, in fact, once again, I want to draw this caution or remind you that make use of the YouTube feature called what? The CC or the subtitle. I'm going to try as much as possible to sound to be articulate, right? So you can hear my diction well and then make use of this. I don't have time to be editing and then making this subtitle available. So make use of the YouTube feature to help you, because you will need to understand this. Without these terms, in fact, in practice, you wouldn't appreciate. This is where you find yourself wanting when you need to enter a trade. A lot of people or beginners are finding it difficult to enter trade. It's not because they don't understand these things, but when they try to enter a trade or execute a trade, they find it very, very difficult. It's because of these the orders that they are missing on. So take note. So let's look at the example of the limit order. If let's say a Bitcoin is trading at 30,000, right? 30,000, but you want to buy at 29,500. It means that this price is below, right? So it means that 30 is below, right? I'm getting confused now. Sorry. In terms of the graph or the charts, you know that 30,000 will be above, and then 29,000 will be below. In this case, you want to buy, but the price is already trading at 30,000, right? But you want to buy at 29,500, so it is below, right? So you want the market to sell to some point, and then you buy. So when you buy, what it means is that you want price to get to that level and reverse, right? It should sell to that point of 29,500 and then begins to what? Buy or rally up. So it's a reverse that you want, but you want it to sell at the moment for some time. So that is what it means basically. So now let's look at the use case. This is ideal for traders who want to wait for specific entry or exit price. Now let's move to the post only. Now post only, in fact, you have to be pausing the video to assimilate. Now to post only. Now post only ensures your order is placed in the order book. We have order book. Let me show you something. Order book, you see this numbers, the red section at the top and then the green there, right? This is what we call the order book. The two, you see the figures, numbers fluctuating, the prices fluctuating. This is what we call the order book. So that is it. Now let me take it again. Post order ensures your order is placed in the order book as a maker order, right? A maker order. I will actually give you a bonus video on a maker and a taker when it comes to financial trading for you to understand it. So post only ensures your order is placed in the order book as a maker order, right? Meaning you won't take liquidity from the market. So a maker does not take liquidity from the market. I will explain this better in the next video. Now, example, you set a post only limit order to buy Bitcoin at 29,500. if the current market price is already at 29,500, it means that your order won't execute immediately. Instead, it will remain in the order book. So you understand, it's a post order. So when the price is already at that price that you want to enter, this is not a market execution. To bear in mind, it's quite different from that. So when you choose post only and the price is already at the point that you want to buy or whatever you want to sell, when you do this, the market will not execute because it will only be taken as what? A maker order. So we will explain what's the maker order. Now at the end of the video, I tell you that this may not be important as a beginner or intermediate. Your focus should be on the limit, market, and then probably the stop. That is it. So you just have to know and understand. So the use case. This is for traders looking to reduce fees by earning maker rebates. So people just engage in trade or this kind of execution, not just for what? Fees or rewards. They don't intend actually engaging in trade or executing trade. So that is what it means. Now let's look at market order. So you see market, that's the selected one. You see the correction mark. So that's the market order. This market order is an order to buy or sell immediately at the current market price. So when you enter, you are buying or you are selling, you are executing trade there and then, instantly, right? That is what it means. So you have to understand this when you want to enter a market. Now, example, if Bitcoin is trading at 30,000 and you place a market buy or your order executes at the best available price, which might also be let me take my statement well. If Bitcoin is trading at 30,000 and you place a market buy, right, your order executes at the best available price, which might be 30,001, right? 30,001, right? Or 30,002, right? So let me spell this out. 30,000 is what? 3000 and 2. That's the figure that I'm pronouncing, right? So depending on what your liquidity. So let's look at the use case. Best for traders who prioritize speed over price precision. So they want to enter the market then especially people do this when they see news, fundamentals happening in the market. That's what they do. So they enter sharply, like what happened a week ago when Trump, I think the day after he was he won the election, he's still the president-elect. So after that, there was this rally in the market, right? So people were forced to enter the market without actually looking at doing much analysis. So it's instant market order or execution. So that is what it means. So now let's move to what? Stop limit, right? So stop limit is also an order. All of them are orders. So I'll be adding them. Stop limit order, market order, post only order, limit order. So that is, so we are at the what? The stop limit order. Now, definition. A stop limit order becomes a limit order once a specified stop price is reached, right? So you want to sell Bitcoin if it drops below 29,000, but you want to sell at 29,800 or better. You set the stop price at 29,000 and the limit price at what? 28,800. Right, let's look at the use case. It is perfect for setting up precise stop loss or take profit strategies, right? So maybe my speaking may lack some kind of the breathing, the relaxing and all that, but then you can pause the video and assimilate. I'm trying to manage the time here. Sorry, but I'll still try and then I'll speak slowly. Now let's move to the stop market. So we are now at the stop market order. Now let's look at the definition. A stop market order becomes a market order, right? A stop market order becomes a market order once the stop price is triggered, right? We will look at this in practice, don't worry. Now, example, if Bitcoin drops to 29,000, you want to sell immediately at the best available price. You set a stop market order with a stop price of 29,000, right? Use case, ideal for quickly executing a trade when a specified or a specific price level is hit. Let's move to conditional order. A conditional order is executed only when certain predefined conditions are met, like price or volume thresholds. So they are conditional. So they are conditions that we set in place. The trader will set in place. It may differ from anybody or someone else. So, example, you could set a conditional order to buy Bitcoin only if it breaks above 31,000, right? Only when it breaks above 31,000. Use case, useful for executing trades based on a specific market conditions. So you set the conditions. So when it just move above it, so there's a strategy that I use, a breakout, right? So I just put my markings there. If price moves above or moves below, I just enter. That is it. That's what I do. So I just check manually, and then when I come straight on the chart, straight in the Binance app, the futures, I just enter because it's my predefined condition by myself. Now, trailing stop order, right? Trailing stop order. Now, a trailing stop order adjusts automatically as the price moves in your favor, but triggers a market order if the price reverses by a set amount, right? Let me take it again. A trailing stop order adjusts automatically. It adjusts automatically as the price moves in your favor, right? But triggers a market order if the price reverses by a set amount. Let's look at an example and then I may speak further. Now, you set a trailing stop with $500 offset, right? While Bitcoin is at 30,000. If the price rises to 31,000 and the stop loss moves up to 30,500, right? Let me take this again. You set a trailing stop with $500 offset, right? A trailing stop order with what? $500 offset. While Bitcoin is at what? 30,000. If the price moves to 31,000, it means that you want in this case you want the market to what? To be buying, and then your SL is $500 away. That's what it means. So if markets start moving in your favor, you want the stop loss to be moving up, but that 500. So it should follow you up. That's what it means. So the system, someone may ask, is it possible? Yes, the system does that for you because you have what? Predefined that. So when it's set it this way, the more the market moves up in your favor, the SL will be moving up and then following you. So that's what we call it trailing. So that is it. It's very, 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 very nice, right? Where you don't have to be sitting behind your PC and then be worried about, okay, should I move my SL up or move it away? So you have set it. So it's a trailing thing. It's a move. It's a good word. It's a good use case. So the use case is that it's great for locking in profits while minimizing losses. You understand? It's very, very nice. Now let's move to the eighth one, which is the TWAP, or better say TWAP, meaning time weighted average price. Time weighted average price. TWAP splits a large order into smaller chunks, right? Large order into smaller chunks to execute over a set period to minimize market impact. Example, you want to buy $100,000 worth of what? Bitcoin, but you don't want to influence the market, right? But I don't want to influence the market. What does it mean? Now, TWAP executes smaller orders at regular intervals. Use case, best for institutions or traders managing large volumes. So it's like, let me use the typical example. If you are a forex trader, we have something called lot size or the contract size. So in gold, I want to enter one lot, right? One lot on, let's say 10 points. That's what I want to enter the whole day in this particular direction. Let's say buy, but I don't want to enter the market. I don't want to enter it at once, because market may change direction or things may happen. So I would like to enter them in small trades, in small positions. So like, let's say the 5 lots that I want to enter, instead of going it once, I may enter it one lot, different lots, and the system will take care of that. Very, very convenient. So that's what it means. We'll look at them further. Now, where are we? The scaled order, the last one. A scaled order divides a single order into multiple orders at different price levels within a specified range. Listen to this very carefully. Very, very powerful. If you should be trading futures, relax and then learn. That's why I told you to relax. Let's take things one at a time for you to appreciate and understand, so that when you try or start executing trades, you would understand what you are actually doing, not by guessing, because guessing you lose. So the scaled order divides a single order, one single order, into multiple orders at different price levels within a specified range. This sounds like what? The TWAP, right? Now, let's look at typical example. You want to buy Bitcoin between 29,000 and 30,000. You want to buy between these prices, right? A scaled order splits the purchase into smaller orders within this range. So it's a range that you want to be buying within. Sometimes there's something we call fair value gap in trading on your chart, trading view. And then what it means is that whenever price taps into this area, any of the area within the area, it's okay for you to enter or execute trade, right? So within this range, that range, normally I do market analysis, a weekly forecast, and then you see me drawing this. So when price taps into it, any aspect or anywhere that it taps into, I want to execute trade. So even if I'm not around, anytime I come around, I come and see the price within this range, I execute trade. So the system is making this very convenient in futures trading, unlike forex trading, where you have to be doing things manually. So I think you are appreciating the whole concept, right? So a scaled order splits the purchase into smaller orders within this range. Use case: useful for dollar cost averaging or when expecting volatility. It happens, right? Volatility, when there's news, fundamental things happening, liquidity, more volume. It happens, and price can actually be playing around this zone. So you set this up conveniently in Binance Futures trading, right? So I think that will bring us to the end of this episode. Sorry, things may sound a bit clumsy, but please make sure you use the Binance Futures, the YouTube feature called the CC or the subtitle to actually listen to this and read, right? If you're still having some difficulty, just hit me up. I'm here. I will help you or better explain things for you. So I'll see you in the next video. Bye for now.